Good day, everyone. It is Monday, and we're so excited on the Juice Radio and Talk Show. This is Pastor Tawana Grant. I am excited to continue in our series on cash money management. Today, we're going to be talking about expenditures. How do you capitalize on some of your expenditures that you purchased, your infrastructure, your equipment? How do you make the most of your investment? So get ready. Go ahead and like and share. Go ahead onto YouTube and subscribe to the Juice Radio and Talk Show. We're getting ready for another exciting lunchtime learning here on the Money Monday series. Get ready. Let's go.
Welcome to the Juice Radio Talk Show. 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 Reality TV, church reviews. Let's talk happy love and marriage lifestyle. Come and talk with us. Come and share with us. Come and laugh with us. Come on and pray with us.
Regina and Clovis, special guests. You should be following your lead. Bless. Subscribe on YouTube. Listen on podcasts. We live on IG and Facebook. This episode is sponsored by Truth and Triumph Ministries.
Good afternoon, good morning, good evening, whatever time you're watching Money Mondays. We have our replay, and so we invite you as you find opportunity to go back and listen to the information again. If you missed last week, we were talking about how do you handle your resources as it relates to your customer service management, customer relationship management. How do you manage that? And we talked about some of the software availability that we have that can support you in ensuring that you are maximizing your network. Remember, your network is your net worth. And so we want to make sure that we are leveraging all of those contacts and leads that we have an opportunity to meet as we go about our day, as we go about opportunities. Make sure that you recognize that that is a true opportunity that could lead to growth in your business. So you don't want to leave anything to chance. You want to make sure that you are managing it well. So today we're going to continue in our whole series on cash management. Another key opportunity that we have is to look at our capital expenditure management. How do we look at some of the things that we may purchase for our business, some of our equipment? How do we look at leveraging those dollars, right? How do we make sense of that so that we may not always have to expense everything? In that current year, we can pay down on some of the things that we are earning income in, and so that we can balance our books over a period of time. Some of you may be like me. You have a tax person who is a financial support to your business, who helps you in allocating and understanding how you can leverage some of your capital expenditures over time and only pay at certain periods of your taxation, right? For that particular residual income. They know how to specifically help you in that. But I believe as a business owner, while we may have professionals, right? While we might have an accountant, while we may have a financial guru who is assigned or aligned to us, and we leverage all of that expertise and experience, you as a business owner should know the basics. So that's what we're going to talk about today. We're going to talk about the basics. Now, if you want to go in depth and in detail, that's wonderful, because the more you know, the more that you can actually leverage it as you make decisions, as you look at purchasing new equipment, as you look at how do I capitalize the assets that I may have, a car that's associated to the business, equipment, manufacturing, some of those large purchases. If you buy a building, you might want to look at that. But when you have some knowledge, right, you can make a better decision. And I always say it's better to do more of your due diligence on the front end, right? Sometimes going slow helps you to go faster. And so a lot of times in business, when you know how things operate, it's easier for you to make a good decision that can ultimately help you at the end of the year when you get ready to pull everything together and do your taxes. These are the things that you want to be looking at as the business owner, entrepreneur, innovator, as a ministerial leader, whatever office that you might have where you're involved in operation. Know that every line of business is some type of operation that you have. And so as you're responsible for that, this is part of your due diligence as a fiduciary for that organization, to make sure that you're leveraging all the opportunities that you have for gain. All the opportunities. And so today, we're just going to talk about just a few of them, again, that can help you as you make those decisions, some basic understanding about capital expenditure management. So really, what is this? This is a process that helps you organize, control your capital expenditures and to improve your project outcomes. How can I pay for something later or take the decrease on that in my taxation over the period of years, right? So that I can level set in budgeting, allocating, mitigate some risk associated with budget overruns. So this is kind of a way that you can do that. If you have some delays in a particular project or a particular effort, how can I manage also to mitigate excessive spending? How can I make sure that I'm not spending a lot? By looking at my capital expenditure, it helps me to focus in. One of the things it does, it also helps you with your balance sheet as an investment rather than on the income sheet as an expenditure, right? So you can take it, you can spread it out over a period of time, the cost of that expenditure over the useful life of the asset. So you don't have to take the whole hit up front. So that's what I'm saying. Today, we're just going to give some basic acknowledgement about that. Again, you may have a tax person or a financial advisor who helps you prepare, who helps you as you're making some of these big decisions. How do I level set? How do I make the most of my financial decisions? But it's good for you as an entrepreneur, as a innovator, as a business owner, for you to know some of the important portions around capital budgeting. Some of those is that it informs you about your long-term decisions. It helps you think in the future, which is so important because a lot of times we're only thinking in the now. We're thinking in very short term. And yes, we do want to have short-term goals. That's very important because you need to have a target that you're marching against, that you're marketing to all the time. But what also helps you is your long-term vision. Because know this, if you're not hitting the short-term goals, that gives you an indication. That's a trend that I'm not going to make my long-term goals because I'm not hitting the ones that should be what I consider milestones, markers that help me know that I'm on track to my long-term goal. The other thing is that reduce risk of unprofitable investment. This helps you, again, to spread out the expense or the risk of a particular purchase over the life of that particular asset so that you don't carry the burden of it up front. What happens if you decide in year 2 or 3 or 4 that this is not working for you and you take the whole hit up front and you might have to decide to pivot? This gives you opportunity to lessen that particular risk over time. Next, it maximizes profits by aligning with the business goals. This gives you a chance as you're looking at your capital budget. How do I spend my money? This is so important. A lot of times we don't think a lot about how do we spend it. We get it. And again, we talked about it before. You want to live in the gap, that space that's in between what you owe out and what you're bringing in. You want to live in the gap. And the further apart the gap is, the more you have available to you to leverage. This is leverage. And so money is a seed. And so as we sow our seed for our business, we have to consider and make sure that we are leveraging our seed, that we're watering it, that we're nurturing it, that we're giving it the right attention, that we're giving it the right support. And that's what capital budgeting can help you do. The other thing is prioritize your investments and allocate resources efficiently. This lets you know, where am I putting my money? And so before I make that kind of decision, I'm going to evaluate. It helps you prioritize your investment because sometimes we may have a big gap and we're so in a hurry or very anxious about getting in the market with that investment that we don't have a chance to prioritize and think it through. Sometimes we need to think through about our long-term or high-cost assets that we're going to purchase. And then it helps you to allocate your resources better. So your funding or your gap expense or your gap available profit is a resource. Money is a resource to your organization, and you want to identify, how do I manage that resource efficiently, effectively, so that it makes money for me and has a higher RIO, return on investment. I want it to come back 10, even 1,000-fold return. I want a return on what I put in. And so capital budgeting helps you to evaluate that. The next thing it does is it provides a framework for you evaluating opportunities. Because when you do this ahead, a lot of things that we've talked about is really about preparing, about setting the stage to go forward, about creating that kind of awareness so that when we make decisions, we can make them well. And then lastly, it also helps promote long-term growth and success by enabling you to have this planning and budgeting of future investments. Where am I going to put my money next? Where do I get the most payback? Where do I have an opportunity that can advance my organization the most? So every opportunity will not give you the same results. So there are some opportunities, know this, that we may go into, and it could be an opportunity that we have to do for resiliency. We need this for protection. So we're not looking for it. Say, for instance, if you're investing in ensuring that you have the right security protocols in place, that you have the right insurance in place, that you have the right awareness, triggers, notifications when there's a particular or possible risk event that could occur that could trigger you to your contingency plan. Those are things that are necessary expenses. While you may not see a great return or revenue in the beginning, it's necessary, because this could help prevent you from a later tragedy or something more significantly or impactful to the organization. So there is a level of expense that's necessary in the elevation or in the evaluation of your organization, as looking at it ensures stability and resiliency. There are certain things you have to do, but there are some capital expense that you want to look at and do for growth, right? Because businesses can use capital expenditure in a variety of methods, right? So there are variety. And again, today, we're just talking about some of those basic ones that give you an understanding. While you may have others who help support you in this lane, I always say get people that are smart around you, because they can help you in spaces where you may not have a strong suit, that may not be your lane. But even in doing that, you as the business owner, you are ultimately responsible. This is your brand. This is your purpose. This is your mission. This is your dream. And so you need to have enough awareness to be able to make the right decisions. So there are some things with capital budgeting that you want to look at. One is net present value, NBPV, net present value. This is a method that compares the present value of the project's cash inflow to the present value of its cash outflow, taking into account the time value of money. So net present value, how much am I going to be making today versus how much I know I got to spend out over the long term, and so that I understand my value of the dollar today. Because think about that. Sometimes we might invest, if we don't look at net present value, we might invest in a project that may be expensive today, and then it may decrease in value in the future. And so then what we are investing in will not yield us a good return. And so we have to look at that. The payback period. Right, the payback period. This is a method of calculating the time it takes for a project to generate enough cash flow to recover the initial investment. This is what I find a lot of times of people going into business oftentimes doesn't have enough awareness of their payback period. Sometimes they go into a business or into a venture, and the thought is that immediately I'm going to be making money off of this. That is always the hope and the dream. That is the rainbow. That is the desire. But as a business owner, as an innovator, as a person who's an entrepreneur, you have to be aware of the possible payback period. How long does it take, one, for me to get this particular item, this particular marketing plan, this project off the ground? How long does it take me to get it off the ground? How long does it take me to get to my customers? And then how long does it take the customers to buy it? So you might have it out and available, but then there's a cycle when they are ready to look at. We talked about seasonal cash flow just a few weeks ago. And so this payback period is very important, that you know your client, you know your customer base, so that you can hit your product or your service to the market at the right time when there is high demand. Normally, when there's high demand for your product or your service, you're going to have a very quick payback period. But that is not always dependable. You have to be able to know trends and evaluate your market, but always plan for, you have a worst case scenario and you have the best case scenario that you're looking for. You want to always look somewhere in between the middle and the worst as it relates to payback period, because if it takes longer than you expected and you plan to use those fundings for something else, or you plan to use that funding for your operational expenses, and while you're waiting on that to really pay back, give back your return on investment, you won't have enough money to last. And so you really always want to evaluate when you're looking at capital budgeting, capital expenditure, how long will it take me to get a return on my investment, my payback period? Internal rate of return. This is the discount rate, rather, at which the present value of a project cash flow equals the present value of its cash outflow, and it measures the project's profitability. How profitable? Internal rate of return. How profitable? How do I evaluate how profitable this particular project will be for me as I look at my capital expenditure? If I'm going to spend out money, and that's what we're talking about. If I'm going to spend out money, how profitable is it going to be for me? I've gone into some deals, and I'll be honest with you. I've gone into some deals because I know it was my purpose. I know that God had called me to do this particular thing. And so I was not looking for a huge return on profit. I'm investing in the future. And so there are some effort that you might go into, and you might be looking for, I wanted to come out even. I want my profitability to equal to my investment into it, and I wanted to come out even. But there's some things that you're working on. If you're an entrepreneur and you're in business, you want to make sure that it is profitable, that what you're putting into it, it is bringing you a return back in your hands, that is bringing you back what you need to suffice for the business. It's bringing you back what you need to not only recoup what you put out, your expense, but also make a profit, a return on your investment. So an internal rate of return, you want to evaluate that because you want to know how much profit will I make from this investment? Because if it's not making money, it may not make sense. If it's not what you intended for it to bring back, you may need to look at it again and evaluate whether the Bible talks about no man goes into war without weighing up the cost. You may want to evaluate, do I want to put a cost and associate myself to this particular effort at this particular time? Now, I want to also say that timing is crucial. Is this the time that I want to invest in this? Is this the period in my business plan? That's what we talk about, planning, that I want to do this. You also want to look at your profitability index. The PI compares the present value of the project's cash inflow to the initial investment. A PI greater than 1 indicates the project is profitable. So when you are calculating up, again, the profitability index, stating that my cash flow is higher than the initial present value. And so if it is more than 1, this indicates that this particular project is going to be profitable. And so again, this is some of the things that as you as a business owner, when you're looking down at the dollar and cents, when you're equating the dollar price of a particular product or a particular project to get it to market, you need to be able to understand the profitability index that you are going to make money for this effort. Otherwise, you need to reevaluate whether you need to go into it or not. And I know, and sometimes this is be hard for people. This would be very hard, especially if it is a project that's near and dear to you, especially if it's a project that you feel is good for you. We talked about this in a couple of sessions back. It is so important for you to have sometimes a focus group or a survey group, or those within your family, within your network, that you can subscribe to use as a sounding board on the feasibility of your particular item or your particular product or your particular service. Is this something that would be in demand? Or would I be able to charge the right fee? I want to say that this is very important because a lot of times we err in this. And I've been guilty of this too. When it's friends and families always trying to give a significant discount, but you have to remember, you're not going to stay in business if you don't charge a fair price for your service, because you still need to be able to make money. There's opportunities where you can do special deals. There's a lot of efforts that you can take and do that, but it should not be at a rate to where you're not profitable. You want to think about it from that perspective. I'm in business to make money. I'm in business to produce a service and provide it at a feasible and comparable pricing and cost so that my clients benefit and so do I. There should be a mutual understanding. There should be a mutual understanding about the cost and the benefits so that they don't outweigh each other. You want to be able to stay at a price point that makes you amenable to your client base, your population, meaning what you're charging and what you're giving out, your service or your product, what you are providing to them is well worth the fee that you're charging. And that one of the things that you know that is by looking at your competition. Know your business, know your service, and know what your competition is charging. And when you know your product or service is much better, you have opportunity. I'm not in any way saying don't charge what you should for what you're doing, because a lot of times people try to evaluate your cost and service against your competitor, but you're not doing the same things. And so that's why it's so important. I've had this before in business where people will say, I call this particular company and they charge maybe $100 less than you do. Okay, then my next comment is, what are they performing for you? What are they providing for you? Because here's what my services are. And I prefer you to go through and check off the list and see if you're getting all that you're getting from me. Are they giving you the hands-on service? Are they providing you with the information and the due diligence to support you through the process? Are they giving you the service that I am? Because then we can compare apples to apples and not apples to oranges. So that's one of the things. That's why I say it's so important to know your business and also to know your field. Know what others, your competitors are doing in the space. And you do not have to compete when you know your business and you have a specialty or you have the efficiency, the professionalism, the capability and the competency, and you're providing a good service. You can stand on that. You can stand in that lane. And then your organization will continue to grow because you're providing a service at a different level. Okay, so really have to think about profitability index, because again, you always want to make sure that you are evaluating that to the degree that I don't want to invest in anything that's not going to return back to me my initial investment plus a profit. My initial investment plus a profit. And so here are a few objectives that you do want to keep in mind. You want to talk about, it helps when you're doing this capital budgeting and capital expenditure awareness. It helps the business to prioritize your investments. That's very important. You don't want to run off and haphazardly make a decision, especially that could cost you thousands of dollars. You want to take the due time. Sometimes going slow helps you to go faster in the end. Going slow in the beginning, do your due diligence so that you can prioritize your investments, so that you can allocate your financial resources more effectively. Many of us are operating with a set limit of funds to do capital expenditure. You have a budget for this year. Stay within your budget. Oh my goodness. I want to say that especially when things come up and it seems like, they'll sometimes encourage you. This is your last day to do this deal. If you don't do this deal, it will be gone. I always remember what the scripture says: be anxious for nothing, but in everything, through prayer and supplication with thanksgiving, make your requests made known unto God. And so I always think about that. Anything trying to press me to spend money or press me to make a decision right this minute, no. Especially if it's not something I already prayed about and it's not in my plan. I believe in God that some things will show up very quickly because I pray for it. I pray for that open door. I pray for that particular expenditure or asset that I want to purchase. And I'm believing God is going to show up. And then it just shows up and it fits everything. It fits my budget. It fits what I wanted and prayed for. And I believe that. And then the Lord is speaking and this is it. But when it's something that's outside of that, it's outside of your range. Oh my goodness. I can't tell you how many times I've counseled people and I had conversations where they didn't even intend to buy that. They didn't even intend to go in to get that. But something within them was just like, oh, this is so good. This is so good. But have you planned for that expenditure? Was that in your budget? Was that part of your investment plan? Was that part of your capital budgeting plan? Was that part of your financial resourcing plan? What did you intend to do? So if it's not on your plan, then you're taking financial resources from your budget to use against something that wasn't even on your list. And so you got to be very careful about that. Again, having this kind of planning in advance helps you reduce the risk of investing in unprofitable projects. Having this kind of planning helps you to put yourself, oh my goodness, discipline yourself in your decision. Discipline. I know sometimes people might say that makes you very static in your actions and in your decisions. You are static because you're going somewhere. And so you're purposeful. You're purposeful in your decisions. You're purposeful in your discipline. You're purposeful with your money and your seed. Your seed has purpose. And so you can't plant it everywhere. You can't plant it everywhere because you need to have it planted where there's purpose so that the seed can grow and give you the harvest and the fruit that you intended. And so you have to be very particular and very specific about what we're doing. And so having this kind of planning in mind, having this kind of awareness in mind helps you to say no when you need to. I want you to know that no is an answer. It is an answer. And that's totally fine. I've had deals, people that have called me and wanted to get involved in certain efforts that they had or certain projects, and I've had to say no. Not that it wasn't a bad deal, not that it wasn't a good thing. It wasn't a good thing for me. It wasn't a God thing for me, or not that it wasn't a good product or service. It wasn't what I looked for. It wasn't what I prayed for. It wasn't what I needed. And so the right thing is for me to say no. No is an answer, and it's okay when you know where you're going. And this is one of the things, as a business owner, as an entrepreneur, you have to be able to say no to things that are not on purpose, not on alignment, that's not profitable for you. It may not be expedient media. It's not, we're not saying that those are not good things. What we're saying is you got to do the thing that's good for you. The thing that's good for your business, the thing that's good for your purpose, the thing that's good for your mission, if you're going to get to your expected end. And so a lot of times when we are distracted and we're making decisions willfully without aligning to our plan, it delays our progress. It stalls us, and then we now have to recoup what we've already spent out. And that's what we're talking about today. Having this kind of conversation helps you to remember, I've got to stay focused to reduce my risk of investing in things that are not profitable for me. I've got to reduce my risk. Next, it helps you get a framework. Oh my goodness. That's what we've been talking about today. Helps you get a framework for evaluating investment opportunities. I got to evaluate that. Yes, it is an opportunity. Yes, it sounds good. Yes, there might be a profit in it for me, but is that along my purpose? Is that going to get me where I need to go? And so when you have this kind of capital expenditure planning, capital expenditure budgeting, managing how you spend, and then when you purchase some of these big capital items, like we said, assets, equipment, cars, other things, a building, when you go into those kind of big decisions, you have to be very key about making sure it meets your need. While it may not be popular, it's necessary to be able to evaluate and ensure that you're doing what is necessary for your business. Everybody may not agree. Everybody may not be on board. Sometimes you have to walk with people even when they don't agree with you. If they're part of your team, you have to explain and you have to help them until they get to see the vision. When you're the visionary, everybody can't always see the end of the road, end of the picture, what's intended, where we're going. And so you as a visionary, as an entrepreneur, as a ministry leader, have to explain, here's where we're going. And so when you see things that are not in alignment with the vision God has given you, you have the ability to say, no, I don't see that in alignment. Here's why. I want to encourage you to be able to explain. And that's why we talked about coming to the Money Monday, getting the information, having this opportunity to dialogue and to share will help you be able to understand your own business. And then if you understand it, you can explain it to somebody else. It's difficult to explain what you don't know. And so it's so important, even as we talked about expenditure, even as we talked about budgeting, even as we talked about risk and management, risk reduction, risk and contingency planning. These are all key to ensuring that your business is solvent for generations to come. That's what we're doing. We want to make sure that it not only is profitable for us, but it's profitable for generations to come. We're building generational wealth. Amen. And we're making it in such an efficient way so that you'll be able to understand it in layman's terms and then be able to grow from here. This is just the beginning, but you can grow from here. It can enable what you already know. It can strengthen you. I enjoy listening to those who have wisdom and understanding and clarity because it helps me to grow. All right. And so when you're around others who have knowledge and information, listen and glean from that. The Bible says that iron sharpens iron. And so we sharpen one another through the wisdom of God. And so finally, with your organization, a capital structure as a basic capital budgeting process, it enables the business to plan, to budget for your future, making sure that you have the necessary future resources to pursue them. I want you to know today that you're going to pursue, you're going to go after some things. God has already called you to be a front runner. You're going to be a front runner. So you're going to make some great things happen. And in doing that, you have to have the ability to be able to sit in what God has given you and to understand it, to understand and explain. I love what Dr. Walker says. He said, you understand what you sit under. Again, you understand what you sit under. And so as you sit under information, you glean it, and then it gives you exposure and it gives you awareness. But in all you're getting, get an understanding. So thank you for all of you who have joined us on today. We're so grateful to have you, Bianca. We're so grateful to have you, Regina, Sister Regina. and those from Truth and Triumph Ministries, that I catch everybody. And I know there are many of you that will be joining us and watching us later. We appreciate it, but we want to make sure that you understand the importance of capital expenditure budgeting. You need to know where your investment is going so that you can retain and maintain a profit. Thank you for joining us today on Money Mondays for your lunchtime learning. I'm Pastor Grant. Peace and blessings to you on today. Be blessed.